Secrets to order flow. Lesson 2. How to gauge order flow. In this lecture, I'll be teaching you how you can gauge order flow using imbalance price ranges and balance price ranges. By the end of the video, you understand why price moves the way it does and how to identify the real direction behind every price move. So as you can see, what we have here is the PD array matrix. The PD array matrix consists of 7 PD arrays on the premium side and 7 on the discount side. The first PD array in the sequence is a bearish order block, balance price range. The second is the fair value gap and imbalance price range. The third is a liquidity void and imbalance price range. Fourth is a bearish breaker, which is an balance price range. Fifth is a mitigation block, again balance price range. What ICT tells you about the PD array matrix is the surface level. Balance price ranges and imbalance price ranges are the keys to order flow. So, what we have here is an example of an imbalance price range. Imbalance price ranges are a key signature in price. They form when a swing low or swing high is taken with clear displacement, leaving behind price levels that has not yet been rebounded. These efficiencies can appear as fair value gaps, volume imbalances, or liquidity voids. Until these ranges are rebalanced, they serve as important reference point for future price delivery and order flow. Here is a real-time example of an imbalanced price range. As you can see, price is moving in a consolidation. Price breaks down below a swing low with displacement and then keeps moving lower until later 4 days it rebalances the imbalanced price range. Here is an example of balanced price range. Balanced price range are areas in price where opposing sides of market, buyers and sellers, have efficiently exchanged orders, creating symmetry in price delivery. A BPR typically forms after liquidity has been taken on one side, followed by a sharp displacement in the opposite side, and then a return that rebalances price within the range. The balance zone often acts as a high-probability support or resistance area and serves as a key signature point for future trades, especially when combined with market structure shift and displacement. Here is a real-life example of balance price range. As you can see, price moves lower, displaces above, comes back inside the range, moves higher, and completely closes below the range. The moment right here, where it comes back inside and causes a rebalance, this balances the price range. When it moves lower, this shows you that the order flow has changed. As you can see, what we have here is an example of a maximum buy model. All market maker buy models or some models are made up of balance price ranges and imbalance price ranges. As you can see, prices consolidating over here, moves lower, creates an imbalance, rebalances that imbalance, moves lower, closes inside a liquidity point or discount PD rate, creates a mitigation block, rebalances the mitigation block. This becomes a BPR right here. That means price cannot go below this low until it has reached a key liquidity point. Price moves higher, goes lower, rebalances a fair value gap right here, moves higher, mitigates all the PDA, completes an maximum. Now let's get to the main part of the video, how to gauge order flow using IPRs and BPRs. As you can see, we have this red shade area right here, which is an imbalance. So when Monday opened, price reaches it and rebalances it. Then price moves lower, displaces through the kilo, creates an FVG, rebalances it, moves lower, displaces through this low, creates an imbalances, rebalances it. Again price moves below a kilo, displaces it, creates an FVG, rebalances the FVG, moves lower again, moves into a key liquidity, creates an rejection block. Now in the previous video I talked about how order blocks are made. Whenever a key low or a key high is taken and displaced in the opposite side, that's an order block. But in this case, we can see a long wick has been created. So this, we will call it a rejection block. A price moves upward, goes into the imbalance, which is now a BPR, and doesn't close above it. That's very key in this lecture. Whenever price doesn't close above an imbalance, that defines that price is not ready to reverse, or price is not ready to continue in another direction. So price moves lower again, creates another imbalance, rebalances that imbalance, moves lower, goes into the rejection block. Now, every key PD array on the left side of the curve will be rebalanced on the right side of the curve. As you can see, price takes support on the rejection block, moves higher, closes above the PD array. This is very key. Whenever price closes above PD array, that means price is ready to go into the next liquidity area. For this will be a key liquidity area after this imbalance. When price reaches key liquidity area, now it will seek another imbalance to rebalance. Now you can see price goes inside this imbalance or moves or takes out this liquidity. Now price moves into this imbalance but doesn't close below it. What that means is price is now ready to go for higher liquidity, which will be this right here, this right here, not this one, this right here, and maybe this right here. But as you can see, price moves upward, closes above this imbalance. This means that price has now reached a significant point in this market maker buyer model where there is no signs of bearish price action. So as price moves above this key swing high, price creates an imbalance. Now, whenever price moves above a key swing high, displaces above a key swing high, and it creates an FVG, what does that tell you? It says us that now price wants to move forward from this price action and rebalance other PD arrays. For example, whenever price takes this, now this PD array, this price range is not valid now. It's not going to be valid now because price has displaced above this key price range, closed above this key price range, and created an FVG. Now you can see price comes inside this FVG, 50% of this FVG, and starts moving upward. What we have seen till now is that we have to consider and see what price does at every imbalance or BPR. Okay, now the same thing that's happening on the 1 hour time frame is happening in every other time frame. As you can see, I've shown you how it happens on the 1 hour time frame. One thing you have to consider is the closes below should only be in 1 hour time frame. The closes below 1 hour time frame matters when you are looking at the 1 hour time frame. For 15 minutes, the same thing happens. 15-minute PDRAs should not be closed below on the 15-minute time frame. So let's begin. Here we are on a 1-month chart. I've plotted out a 90-minute cycle. And you can see this is the sell side of the curve, and this is the buy side of the curve. I marked out certain highs and one of the imbalances, a breaker and a swing low. What these are is the high of the price range that was rebalanced, the high inside the price range that was rebalanced. All these highs are the highs inside the price range that was rebalanced. Now you can see when this swing low was taken by the swing low and starts displacing, I marked it out as an order block. Price moves upward, closes above this key price range, comes inside this key price range, rebalances. Now when this rebalance happens and nobody is close below this, you know that we are bullish. One more thing you have to consider is there should be always a high time frame key bounce price range or imbalance price range in which this price action should happen, where imbalances are broken above and rebalanced and BPRs are closed above and rebalanced. So you can see after rebalancing, price starts to continue to move upward. It closes above this range, goes to the high of this body, starts moving upward, closes above this line right here. When it closes above the line, creates an FVG, goes inside the FVG, start moving upward. Now the candle like comes inside another candle, another PD array, sorry. The PD array that comes inside another PD array. Sorry. The candle that comes inside another PD array is also a PD array. So you can see the candle that comes inside this FVG. We also consider this as We also consider this as a PDOA. Price doesn't close below this range, so we know we are bullish. Price move starts moving upward, and the market make a buy model is complete. And for your study is if you can spot where price is imbalanced, where it wants to rebalance and how displacement happens with BPR and IPR, the chart will start speaking to you. Now it's your turn. You can go into your charts and at least mark out 5 BPRs and 5 IPRs to track how price reacts to them. Study the displacement that closes above, note the rebalancing, and journal what you see. The more you can do this, the faster your eye will sharpen and start seeing these things. Thanks for watching, stay consistent, and I'll see you in the next one.